All right, good day, everyone. Welcome to this meeting. It's gonna be shared, it's gonna be recorded, but yet short. It's gonna be a brief meeting, a brief call, yeah. Uh, so I wrote something in the group this morning. I said sometimes or most times we underestimate what we can achieve in a month and overestimate what we can achieve in a year. One mark of any successful human being is the ability to never back down, to show up for the right reason. For the right reason, must show up for the right reason. So let's look at a couple of things this morning. It's a new week. Most of you already know I trade Tuesdays, Wednesdays, and Thursdays, with exception to Mondays and Fridays. And the reason is just personal. All right. I have my highest win rates Tuesdays, Wednesdays, and Thursdays. So what am I looking at for today, Tuesday? But first of all, before we go into that uh, part of this meeting, I want to also remind most of you, if you haven't watched, there's a free YouTube video, 1 hour plus video in our YouTube channel, which I'll encourage you to watch if you haven't done that. It's not in the course, but I will probably leave the link in the group. Okay, so essentially in that video, we talked about premium, discount, equilibrium, and liquidity. All right, premium, discount, fair value gap, liquidity, just entirely some of the basic things which I feel are all out there on the internet that every trader should know. Okay, and it's important to remind ourselves that price moves from liquidity to liquidity. Give me a moment. I don't know why. I need to crash this. Price moves from liquidity to liquidity. Okay, so this is GBP USD, for example. I was actually expecting this buy from yesterday, but you can see what it's doing at the moment from 4 hour time frame. So down, start buying from this level, and can expect other couple of things. But before we go into that, let me show you guys something. There is what we call protected high, protected low, protected high, protected low, or strong high, strong low. Please pay attention. This may be the only thing I would say that may be of relevance in this call. The other thing will just be looking at the market. If you take your setup or any trade you take that has, let me explain what protected high or lows are, or strong highs or strong lows are. Any of your trade or setup that has strong highs or low as its roots or at its base will have high probability of playing or happening. So what are they? Of course, if you have followed for any length of time, you know there are about 3 highs or 3 types of highs. You have relatively equal highs, or your M shape. You have the highs where the first leg is higher up than the second leg. This kind of high, I mean, when I talk of high, I mean this and this. Those are the high I'm referring to. Highs. Then you have where the second leg is higher up than the first leg. So if you invert this to save our time, you will get the lows. Now, these highs will happen at different time in the market. I don't care the time frame, but the important thing to know is that this one, where this second leg is higher than the first leg, is what you refer to as your strong high or protected high, especially if after the high is formed, it now sweeps a low. And you must know when price, sorry, it now breaks a low. And you must know the difference between break of structure versus sweep of liquidity. All right, that will be found that day. But I am comparing these 3 highs, relatively equal high here, like your M top, where both of them are relatively equal. All right, then this one, the first leg is high up than this second leg. this third one, the second leg is higher up than the first leg. Of the three, this is your strongest. Don't bother about any of these two. If you see price printing this kind of high or this kind of high, they are both weak highs. Okay, so it's easier for price to go back up and take out this one. It's easy for price to go back up and take out this one than it will be for price to go back up to take out this one. Now, eventually, every highs or lows will be taken out eventually, but the market is a zero-sum game. It goes up, it comes down at various times based on various circumstances. All right. Eventually, every highs and lows will be taken out. But with respect to strength, all right, if you have three pairs all looking to sell and all of them are having these structural highs above them, you want to sell, please by all means pick the one that has this leg or this kind of high, which we can call a sweep of liquidity and break of structure. Let me explain that one more time before we continue. So what makes that high very powerful is most actually when you have price probably going in an upward momentum, then all of a sudden it culminates down this way. Once this happens, it has done the damage. Price most likely has done the damage by sweeping a high, then break it down lower. Now, this thing will keep going lower unless this place it falls down to is there's an order block or a higher time frame narrative or something will be here that will make price just go back and do that. Other than that, it's going to keep selling till it hits that objective. Now, that brings us to another thing I want to talk about today. Trading range. Trading range. As a trader, you should or you must have a trading range. Trading range will entail where you expect price to, where price is, what price is currently doing, and where and how far you expect price to go to. All right. If after your top-down analysis, you cannot, in a nutshell, determine your trading range, then that trade is not worth taking because you are just gambling, hoping it will do what you want to do. Now, even when you have, please pay attention, even when you have trading range and price is doing like it's not setting, okay? You see, there's a passage in Bible that says, even the righteous are scarcely saved. What would your righteous do? Even when you have trading range, there are times the market will still do its own thing. But you see, you have advantage at this point than those who are just trading because they are hoping that the market will do what they expect. Hope is not a strategy. Hope is not a strategy. It's either what you are looking for is there or it's not there. And I usually tell our guys, less is more. I would rather trade once or two times in an entire week and take one TP, one BE, or one SL, as the case may be, one or two trades in a week, than trading 15 times and nothing come out in pigeon, if you know what I mean. So you want to be a sniper, not a rapid fire shooter. If you are here for the long term, I'll talk about trading range. I'll explain what that is. Finally, on my prep talk is money management. How many times have you heard me say or heard any trader say money management is the holy grail of trading? Money management. All the time you've lost an account, blow an account, feel frustrated. Check. Behind all of those losses are inappropriate money management skill. And it's a skill on its own. It's very boring to learn, but it's the most important part of trading. If you would do that to your trading, just this third part I'm mentioning third for a reason, so that I can spend a little bit, 2-3 minutes in it. If you would spend some time working on your money management skill, okay, it will do you a whole world of good, bigger than learning a new strategy. When you learn a new strategy, what happens? You feel buoyed up, your adrenaline comes up, you feel this is it. Finally, what you've been praying for has come. Question: how many times have you learned a new strategy and you feel this is it? This is it. But months turn to weeks, or weeks turn to months turn to years, this still not is it. Why? The reason is money management. And you have to tell yourself the truth. You're not doing well when it comes to money management. If you keep blowing account occasionally, then that is the reason. Now, one of the things I normally do and I recommend is and it may be counterproductive from the business part of it, but I'm not just here for business. Yeah, this is, I mean, with respect to people in our community, we are here for impact. Now, it may be counterproductive, but I really care less. Okay, you have to tell yourself the hard truth, and one of them is you are risking too much per trade. How do I get better? If you have $100 account, the maximum risk you want to risk for that account is $20. Now, sometimes we all get into what we call losing streak or losing cycle, you see. But the losing streak or cycle in trading will affect some traders more than some others. If I have $20 I want to expose for a $100 account, and every time I trade, I risk $2. That means I will have to lose 10 straight times for me to blow up that $20 off my $100. So if you don't know how to segregate or separate your accounts, gain some consistency with that before you start thinking of flipping. Before you think of flipping, turn your $100 to $1,000 is important. Now, why this is key is this. If both of us have $100 accounts, I already broke them $100 account to, I'm going to risk maximum $20. And for every time I lose $2, I keep that disciplined approach. Guess what will happen? If I take 2 losses today, I will end up losing $4. As opposed to the other person that is wanting to flip the account of $100 and risk $20 per trade. And both of us lost two trades because the market is doing its thing. That person lost $40. I lost $4. Psychologically, who will be messed up the more? So you are messed up the more, truly, and this thing should really pain you. That's why I left some days back a notion for, what's it called now? Journaling. If that one is difficult for you because you're not a technical guy, then please use handwriting. You don't have to trade. If you cannot record your trade, that means you are over trading. Plan your setup. Take it. Eat your stop loss and smile. Eat your TP and smile. But don't get overwhelmed. You are the one responsible for the overwhelming nature of trading. All right. We are the one responsible. Now, in closing remark, I'm going to talk about range, trading range. In closing remark, right? There is yet, I started by saying, or I typed in the group that we underestimate what can happen, what we can achieve in a month. And yet we overestimate what we can achieve in a whole year. Today is 19th August. A lot can happen between today, 19th August, till 19th September. You can still smash that goal entering the ember period. But the big question is, how hungry are you for it? How willing are you to get it? How hungry are you to get it? All right. So take our time after all of this. I recorded this for a reason. Take our time after all of this to settle down and ask yourself the question, am I wasting time? Is this thing working? Am I willing to put the work for me to allow this to work for me? Now, enough of that. Let's talk about trading range. Now, what I'm going to show you here, please, after now, rewatch this video again and try to implement. Try to go back and look around it. Trading has two major steps. Number one, or let me say three. Number one step, knowing the market direction from the higher time frame, daily, weekly, monthly, wherever, from market structure, everything you've learned in our course, trying to know the market direction. Number two, trying to trade. Notice I'm using the word trying, trading the direction. Trying because sometimes you'll be wrong, sometimes you'll be right. All right. And what will not keep the balance is your money management skill. Okay, but if you come into the point where you'll be having steady winning cycle, you don't get out of yourself, don't get over all worked up. So again, the first one, market direction, that in itself is huge. The second part of trading is trading that direction. And probably if you're listening to this for the first time, I don't know. I think this is not a general call. This is just for inner guys. So you already have some of our materials. But again, I will leave the general YouTube link that cover the whole lot of things. Then the third part will now be your, even after you want to trade the direction, will now be your money management skill. Because you can be right that market is bullish and yet you will still hit SL. Why market will end up being bullish? And it's crazy. All right. So knowing when and where to enter. So it's a whole lot of work in itself. Trading is a whole lot in itself. So you want to keep your system as simple as possible. Now, because the major part of what I want to talk about today is dealing range or market range, and then we'll look at a little bit of analysis. This is something I want to show you. I have very limited time. Look at this liquidity low for GBP USD. You can see how this low came all the way, took out this swing low right there. So after taking it out, what happened? Price expanded. So usually once price sweeps a liquidity, what follows is expansion. All right, what follows is expansion. Okay, especially liquidity taken at, if it's buying at discount, if it's selling at premium, and probably we'll talk about that in our next meeting. So you are seeing what is happening currently here, that this price sold off yesterday to this liquidity and is most likely expanding. Now, let me draw something for you. This kind of pattern can form a very easy dealing range for you. So you see price sweeps a liquidity, breaks this structure, pulls back into something here, fair value gap, inducement, anything here. All right, this pullback here like this, if you can get in on these buys around here, the logical target for a bullish momentum will be this high here. So imagine you are here. I will explain again. Imagine you are here. Your next logical target will be this high there. So with a dotted line, noticing or planning that as your entry region, this should be your exit region. Now, that would mean all things being equal, what's the logic behind this trade? First of all, you have price coming down, maybe doing a lot of things, then sweeps liquidity, and this low that takes out that takes out this one, maybe reacting from a higher time frame order block and many other things that you may not see because we're just fleshing out something raw. Then it expands to break this high. This break must be very clear. Okay. Now, this can happen in the 1 hour, 4 hour daily. What I am doing right here and now, I'm just giving a general overview. In our next meeting, still is this week, I will break this down specially. But I'm just trying to show you what a daily range should look like, or what a range should look like. If you are buying, you should be more comfortable to look for buys here or around this region. Why? Because below this region, price has swept liquidity here and has broken structure there. So this pullback into this region, which if we use our FIB tool, would actually be around, what was it called? Discount or 50% below. It should actually be around that region. Will give us more confidence to buy, and then we can exit our trade here. Now, most of you have the mechanical trading tools. You will see how all of these things correlate. All right. But the reason why I'm giving us all of these options, not all, majorly two, this one and then that one you already have access to, is so you will not be, how will I put it now? You will not be stuck. Okay. So you will not be stuck. I'm a stickler for doing one thing, knowing one thing at a time, but I am not, you shouldn't be limited. That's the point. So logically, it's correct to look for buys around here after this has been formed. Just like here now, after this sweep and break has occurred like this, it is logical, although price went very high up, after this has formed, not this one, it is logical for price to actually come all the way inside. Why is it not falling down? Here, to look for the next leg of buy. Now, this one is 4-hour time frame. So we'll look for other examples. Why is it logical? Because it's coming from the back of a sweep and break. Now, the other setup that it will not have a sweep and break. It will just be going like this. Your typical bullish market structure. Okay? That's still okay. But you see, if you want to have high win rates, then I would encourage you to stick with setups that has this super. That's why the MTC course, we told you about the 1 hour entry, how that if you have an entry that gives you that pattern, if you will, it's strongest for you. Let me see. Let me see if anybody's typing yet. I've not taken a trade yet this week. I think gold is trying to show us something. Just give me a minute. Let me get example for us so that it will make more sense. I actually looked to sell this gold yesterday. Let me show you how that, but my range wasn't fulfilled yet, but at least I got my 3 hour. No, in theory, because if I don't trade on Mondays, does not mean I do not look at the markets. I just look at what's happening and all that. So look at gold, for example. Look at last week. Today is Tuesday. All of this is price action, very choppy and sideways. Look at last week, Monday. You had last week, rather, Thursday. You had that high, taking out this previous high, and then this low here, breaking. Let's zoom in so you see it more clearly. So it went up, did this, and boom, that's happened, and then went all the way down. I think 4 hours made more sense. So you can see that high took that sweep, break down, this one, and then price broke. Then yesterday, price went up, took out this high here, reacted in that area, sold off. Now, in this case, my dealing range should actually, not that I'm out of it yet, should actually be this low, because this is what we see. This break, oops. Then we have this high here. So as price rallied back up to take out this liquidity into this region, which aligns with our MTC, you can see the expansion there. Okay. 4 hours, consider expansion here. So this was what you expect to sell from yesterday. So that's how you see that setup. So I expected this TP to get hit, but short. Now beyond the entry, I'm coming over. There's a reason I'm showing you guys this one. This was supposed to be my range, 3.6, but then it didn't get there. I have a rule that once price gets to at least 2 hour, I have 50% payout and all that. So I think Euro JPY and JPYs gave us a very good sell also yesterday. But let's look at this. Now, the reason why this is so strong, and I would like to take this kind of setup over and over again, is because of the roots it has. It has the sweep and break of structural roots behind it. All right. Now, you can take setups without those, but your highest win ratio will come when you have a sweep at the top, break of structure, inducement liquidity around it, then correlating with what you've always known. All right. Now, you can trade this one on its own. What do I mean? Sweep, break, inducement, maybe or not break, price come back here, you sell off. Your stop loss is above that high. Target is low. 3 arrow or sometimes can be more. All right. Now, this works mainly because you are coming from the fact that your high, where your stop loss should be around, or your low is protected. And we can actually look at multiple examples. Somebody type something. Just give me a moment. Let me see. Good morning, sir. Welcome. All right. So one of the things you do for yourself is to also look at the fact that after price takes out liquidity, there is always an expansion. Give me a moment. I'll call you back on the meeting, please. Just type right to me. So you would discover, and that's going to be your personal exercise, if you will, That one's price takes out a high. Why? Because money is resting above all of this area. I'm still seeing gold dropping. All this one is doing. I'm not buying these buys yet. I'm not buying unless it's a scalping buy, but really I'm not looking for. I'm seeing gold dropping. Let's do a top analysis together now. Let's go. I have like 5 minutes left. Let's go. I was looking at GBP USD first. GBP USD. Let's do something together as we. Okay, so you can start from the daily time frame. You can start from the weekly time frame, whichever one. Okay, so let's try. Let's do the weekly. Let's see the weekly time frame. You know there are many ways to get your bias. We said 3 parts: bias, trade the bias, and your entry. So from the weekly time frame, this candle, did it take out this one? Yes, so we can see there was a sweep here. Can you see? Can we all see that some weeks ago? Well, it's not very clear, Sha, but that's not our concern yet. So let's continue. So we had price push up, down this way, rejected. We have this one. Last week we had this reaction up, and so if there is anything I'm looking at is a continuation or a buy continuation from this OCKL, open close key level. So it's logical for price to actually buy from where it is to this one really took. So GU is at a very dicey position, all right? Because last week we took out some high and then rejected below. So it's in a dicey position. So weekly is not really giving us a clear cut that I cannot tell you from here buy or look for sell. No, you have to play along the line because of where we're coming from at the bottom. It's still dicey. It can just pull men to clear this low very well. This one clearly took out some highs, so and rejected. So we are still looking at, so it's better we trade this daily, right? Day by day, and just pan out what will happen. So we're now in the daily time frame. Let's look at this. Currently, we have swept the low of yesterday, today, and this is a very good stuff. Good stuff. If you meet our condition, so I haven't taken out the low of yesterday, while we're targeting yesterday's high rather. So that's a good range. This can also be a range. Now we'll talk about range. Price takes out a low, you expect the high to go. If it takes out the high and comes mid-range, you can expect this high to now go. So in this simple example, I've given you like two ranges rather. The low went, you expect the high to go, all things being equal. As it starts buying from after it takes out the low, expect this high to go. Now, if it takes out this high very well, and then pulls back pulls back into mid-range, you can expect as it goes up again, that high should go, right? Now, notice I'm using computer language. If this happens, then that should happen. If this happens, then that should happen. So if low of yesterday is taken out, then this should happen. Does not mean it has to happen. It should happen. So the next thing we should look out for from our formula is the 4-hour time frame. Let's see if we have had expansion after we took out yesterday's low. Let's see. Yes, see. Yep. We do have an expansion. And we consider the recent expansions, not just this one. I think this is the candles high that we consider next. Good. All right. This is the high we consider next. Remember, that's the target, potential target. Let me change that color to black. Oops, my meeting will end in less than 10 minutes. So that means we have a potential buy opportunity at that area, 1-hour time frame. And yes, so this is my only setup for today, friends. I expect gold to drop, but I don't see reason to go along gold. But you see, this is my only setup I'm expecting today. Now, all things being equal, from what where is my Oh my goodness. I've compressed this my chart. I cannot even find my line 2. But if you can look very well, you will see there is a sweep and break of liquidity here. Sweep and break. Look at this low. Swept, break, right? That's what I taught us. We just have a low that was formed an hour ago and price went up. So I expect this to happen now and then buy. So without wasting more time, gentlemen and ladies, I will put my buy limit around this region. Stop loss, just there's no much gap to cover. Just leave it there. You can target 3 arrow, or you can swing this. All things being equal, that's where we expect price to go to. But if price doesn't get to this area today, there's a high degree chance you get it tomorrow. But you don't have to wait, because you see, from structural standpoint, this area here is a liquidity point that price can most likely sell from. So instead of risking that much, you can target your TP here, which is about almost 3.96 or 4 hour. So yeah, this is what we have for today. Simple setup. What did we do? Weekly, we couldn't see much. We went to daily and did a couple of things, which you can again check. Now, if you're probably watching this, you haven't gotten our $5 course, all of these things are taught right there. We'll be opening our next batch of mentorship by September. All memo regarding that will be posted in the group. Please don't miss it for anything. Don't miss it for anything. Let's milk the ember period. All questions, direct them to my DM. I generously allow this meeting to end within 40 minutes. Send them to my DM, and every which way you get to know about. If you're watching from YouTube, yes, I'll upload this on YouTube. Yeah, if you're watching from YouTube, then also leave questions for me inside. More importantly, at the end of today, I want to see the result of this setup. Win or loss, please post them to me today, 19th August 2025. Those of you that joined in for the live call, thank you so much. We'll meet again on Thursday by God's grace. Let's keep this momentum building. I'll see you in the next one. Bye-bye for now.